German quality you can trust.
Welcome back. Still watching Market Sense. Well, the market is clearly in a good session today. Asia, all over Asia, we are looking at big gains. So India is also mirroring that kind of move. And one stock from the consumer space, Liberty Shoes, that is gaining 3.5% in today's session. But not only today. If you look at the last 1 year graph, you would see that it has really given pretty handsome returns for its shareholders over the last 1 year. But we understand that the company is undertaking some kind of a restructuring exercise. Let's understand the rationale behind it and the benefits the company could accrue of this restructuring exercise in the coming quarters, with the management joining us on the show. Mr. Adesh Gupta, he's the CEO at Liberty Shoes. Mr. Gupta, afternoon. Thanks a lot for joining us. Tell us in brief about the restructuring which you're undertaking. By when can we start looking at the benefits of this?
Good afternoon, Ajay. Well, the company has thought of restructuring almost, you can say, 3 years back, where the company has achieved excellence in manufacturing, supply chain, and various other business processes. And the last mile delivery is the financial excellence. The idea of the company is to achieve financial excellence and put the company on a rapid and growth path, and also the trajectory where the company can look at double-digit growth in the years to come. As the footwear industry is poised for a quantum growth, and for the next 30 years there is a potential of 20 to 30% CAGR as an industry. So the company has thought to restructure its operations and its business model to ensure that the small shareholders or the minority shareholders get the maximum benefit besides the promoters. So the idea of restructuring was basically to ensure that the related party transactions which are there in the company vis-a-vis promoters, they are diminished, and the restructuring process which has been announced almost 2 years back is now back on track. And on the 31st March of the last financial year, we had officially closed that part where we have announced that the restructuring will finally take place, and the model of restructuring will start working from this year. And we're hopeful by July or even earlier than that, we will be able to complete the restructuring model. But for sure, the implementation and the legal approvals and the shareholder approval will continue. But potentially, you can say that by July or by end of the financial year, everything will be completely closed.
Let's talk about your store plans, store additions. You indicated earlier that 100 new stores is what you're looking at adding in the next in a year's time. Take us through the regions which you have earmarked so far, and also the phenomena of real estate prices almost plateauing out and some areas actually falling. That's what reports are indicating. Are you also benefiting from that?
Frankly speaking, that the company has opened almost 60 to 70 stores in the last 2-3 years each, and the plans of the company are again to open 100 stores each year, and we would like to take the numbers to close to about 1,000 in the next 3 to 4 years from the existing figure of 620 as of now. As a result of that, the company will automatically grow into double digits when we go for these kind of growth model, where we don't see any major challenge except the availability of space. The company has adequate funds to fund the growth, and also the business structure and the whole operations have been put on excellence mode, where the company is capable to have the quality of supply chain as well as the manufacturing excellence. Having said that, the current situation of, yes, the real estate prices softening to a great extent surely is an opportunity. But since a lot of real estate are also are semi-finished or they are somewhere in the middle, so there is a challenge as well where the softening of prices are also there. So that is an opportunity, but the challenge is also that we do not have a lot of you can say malls which were promised are not coming up. So we have plans to open 100 stores subject to the availability of space. But we are hopeful that this year probably the space availability will be much better than in the previous years, because rental is always a major constraint in making a decision for a particular location or a store. So we believe that in the current financial year we should be able to open 100 stores, but surely 60, 70 we can never rule out. That is the minimum we will be able to open. So as a result of that, surely the company will, grow into top line as well as bottom line.
Could you give us a roadmap on how growth would pan out? I mean, I know you're talking about strong double-digit growth over the coming years, but, FY16, FY17, given the restructuring plans that you have, the acquisition of some smaller brands, what's the road ahead looking like year by year in terms of growth for top line as well as profits?
Let me put it this way, the company has a vision which is already in the public domain, that we would like to be 1,000 crore company into the next 3 to 4 years. So with that roadmap of 3 to 4 years of a cumulative growth of 20-25%, the idea of the company is that to roll out more and more stores. And if we are able to open 100 stores, besides the other verticals which are wholesale, institutions and exports, there the growth will also come. So we believe that this vision is achievable, and the financial restructuring which the company has done will help the company to raise funds if required at any given point of time. And also, the growth trajectory which is going to come will be surely more from the retail, because when we open more of the company-owned, company-managed stores, we are able to capture the full price of the shoe as against the distribution model. So as a result of that, we believe that the pan-India growth which we are foreseeing in the form of franchisee or in the form of company-owned company stores will really help and beneficial for the company. As far as the next year or the current year is concerned, we are hopeful for a growth anywhere between 10 to 20%, subject to the state of the economy, because right now the economy is improving, but still there are a lot of factors which govern the growth, and we are hopeful that if the year grows well, we should be able to target about 20% growth in the current financial year. As far as the rollout of stores are concerned, we are more bullish on the south, because where the presence is gradually increasing. On the north, we are already much more present, but it doesn't mean that we will not open more stores in the north. But we see a greater opportunity in the southern region and the western region, and we believe when the VAT is going to come, that will give us advantage, because then the GST, sorry, not the VAT, the GST is going to come. It surely will give us a level playing field amongst all states, because the differential of taxation will go away. So that will open up let's say the opportunity for growth in the unrepresented areas, or the states, or the cities, or the districts where we are not present at all.
All right, Mr. Gupta, we'll let you go on that one. Thanks a lot for joining us on the show today. Prakash, a quick chart check on Liberty Shoes. It has risen about 70% in the last 1 year. Pretty fairly covered in the brokerages as well, good 2.25% today.
Well, the basic structure of Liberty Shoes, Ajay, is positive. Seen a strong support on the levels of 250. Now it's hung up. Needs a breakout from levels closer to 270. Once that happens, I think Liberty Shoes should go to levels closer to 300. It's a safe buy. Only thing, stop needs to be deep. It's an illiquid stock below 245.
That's a quick view coming in on Liberty Shoes, higher by about 2% as we speak. But let's track all the action from the business of Bollywood. Anushka Sharma may not have been in the news for the right reasons recently, but her thriller venture, NH10, was one of the highest profitable movies in the first quarter of 2015. Avan joins in to tell us about which multiplex stocks are going to benefit from last week's box office hits. Avan.
Well, Tanveer, in fact, it has been a pretty stellar week, or couple of weeks rather, for NH10. That movie has done fabulously well, and in fact is one of the top 5 grossers, #1. In fact, for the week gone by, that's March 27th to the 7th of April, the top 5 grossers include NH10, Hunter, Dam Laga Ke Haisha once again, there's Barkha, as well as Dilli Wali Zalim Girlfriend. Now, NH10, in fact, in the first week itself managed to gross in a whopping 19.4 crore rupees, and this is across 1,191 theatres. And in the last week gone by, 2.9 crore rupees is what it grossed in the third week.